Welcome back. Let's talk to Mark Oswald. He's a strategist at ADMISI. Very good morning to you, Mark, and Happy New Year to you and your family. Let's have a few words on non-farm payroll. Historically, the biggest data point of the month. Okay, is it still a key number?
I think over the last 6 months, partly due to the distortions that we had from the hurricanes. Obviously, we've had a lot of distortions there, and it's not been as significant. Nevertheless, before the hurricane distortions, we were always getting less and less reaction to the labour data. The forecasts for it today are basically that we get a 190,000 rise in non-farm payrolls. The ADP data yesterday, which was in many ways unsurprising, was much stronger than expected, 250,000. And I would suggest that is exactly where the risk lies in terms of payrolls. It's very notable that the ADP data in December over the last 3 years has actually been quite reliable as a pointer. It's not always reliable, but in December it's been very reliable, with no more than a miss of 15,000 on average. So that sort of tends to suggest we get payrolls at 230, 240. But the most important thing is going to be, as ever, the average earnings data.
Right.
Now, they're expecting 0.3%, which is typical for a December, which would leave the year-on-year rate at 2.5% year-on, which is, it's not weak, but on the other hand, it's not really indicative of a labour market which is as tight as 4.1% would tend to suggest, should be pushing up on wages more than it is. I still think that there is a risk on the average earnings data, not necessarily for this month specifically, but that it does pick up rather more as we go through the year. And that will impinge upon the Fed quite heavily, particularly as we've got a Fed which is rather more hawkish this year in terms of the voting members. But it's certainly for the market, today's number, it's going to be all about the average earnings number and rather less about the payrolls. If the average earnings number were to come in slightly above expectations and we were to get a payrolls number of 230, 240, then I think we could see another quite significant bump up in bond yields, which may start to impinge slightly on the equity market, because as bond yields rise, so the relative attractions of equities start to look rather more challenging.
Understood. Mark, thank you very much indeed.